Year to date, what's really driven returns is estimate revision momentum. So stocks where earnings and sales are going up, those are the stocks that are outperforming. You could argue that's very rational, and that's kind of how you want how the markets to behave. Last week, it was all about growth and size, i.e. large cap growth doing well. Another way to say that would be Mag 7, kind of caught a bid here ahead of earnings. So year to date, the story's been earnings. I do think we're seeing people, and I hate to say this, kind of rotating into Mag 7 or using Mag 7 as a catch-up trade, which seems almost comical if you think about how those things have traded over the last 12 to 18 months. But yeah, estimate momentum. It's all about earnings this year.
I'm reading Justin Beer's book on Fidelity. It's absolutely, it's just a beautiful snapshot of Boston umpteen years ago. And before Ned Johnson, there was Ted Johnson. And Ted Johnson was completely taken by reminiscence of a stock operator, which we've all read 14 times. And that's about plunging. Are people plunging now? Are we losing control of the how muchedness that we're betting on?
It's a great question. If I was thinking about plunging right now, we'd probably be talking about supply, frankly. A ton of equity supply coming onto the market. The big IPOs, the Hynix ADR obviously getting listed last week. And the numbers are almost unfathomable when you think of them. I think the Fed resetting its balance sheet probably changed our view of what $1 billion is. But, that SK Hynix deal, the rumor ahead of time was they were going to do $8 to $10 billion. They ended up doing almost 30.
Wow.
The size of the SpaceX IPO, very large. Google coming with a secondary, rumors of Meta coming with a secondary. So I think the big discussion right now, Tom, in terms of what's big and what's interesting is just the amount of equity supply that sort of has already hit the tape in June and we're kind of gearing up for through the balance of the second half.
All right, I have a technical trading question, which I've been holding until you come in here. That SK Hynix deal, awesome monster deal in the U.S., but it also trades in Korea. Is there an arbitrage between the two, and are your traders trading that thing?
Excuse me, are you asking for a friend?
For a friend here. Exactly.
Well, unless you have a friend that also lives in Korea, it'll be a little tricky. But it is true. SK Hynix, I think in the overnight was trading at a 25 to 30% premium, the ADR in the U.S. relative to the local shares. So there is a big gap there. I would say, though, if you look at Taiwan Semi as an interesting peer, that also has an ADR listed in the U.S., that premium got as high as 50% last year. So it's not unusual for this to happen. A lot of it is just liquidity driven. A lot of retail investors in particular can't trade local shares in Asia, so they have to use that ADR to get that exposure. So yes, there's a premium. What we've found is that premium tends to be highly correlated to how well the stock's doing. The better the stock does, the better the premium gets. And you might argue that is U.S. retail investors chasing that stock that they just frankly don't have access to in the Asia hours.
I told you Alexis he would know. So anyway.
That's good. Thank you for clearing that up.
Exactly.
Fantastic.
I'm making most of it up, but to be fair.
What are we doing going into earnings? You guys and all your banking peers started off tomorrow. What are you looking for? What do you think the market's looking for?
Look, the bar is going to be high. I mean, we beat consensus by almost 18% last quarter. So, the bar is going to be pretty high this quarter. Look, banks, I think most people are anticipating a relatively strong result. We've been very bullish on the large cap banks for the last few months. Good IPO pipeline, good trading environment. CCAR went well. The regulatory burden is a little more friendly. So I think expectations are high on banks. I think the single most important thing you're going to get out of earnings season is the CapEx guidance from Mag 7 and the hyperscalers. I mean, you have a year where the S&P is up double digits. Mag 7 stocks are basically flat. How is that happening? I would just call that trickle-down CapEx spending. A ton of CapEx from those hyperscalers is translating into massive earnings growth from the recipients of that CapEx spending. So what we need to see here is, just reiteration of A, the CapEx spending, and B, the tightness of the bottlenecks that are benefiting from that spending.
Stuart Kaiser, Citigroup with this U.S. equity trading strategy. We welcome all of you. The way you choose to listen to us across America on YouTube, building each and every day. I completely underestimated this. I mean, globally, YouTube is frightening.
Oh, it is? You're zapping.
Bloomberg podcasts as well. Paul Sweeney with Stuart Kaiser.
Small cappers. I'm looking at the Russell 2000. That's up 20% year to date. That's beating the S&P 500 handily. What's going on there?
It's a really interesting question just because the Russell 2000 also rebalanced in the last 2 weeks. And, what really happened with the Russell is it really benefited from the AI trade and from the power generation trade. And it got quite concentrated. So as much as we typically think of small cap as a cyclical index, banks and energy, very focused on U.S. economic growth, what's worked this year in the small cap has been biotech and it's been AI related stocks. what we saw with the rebounds, frankly, is that that kind of reversed a little bit. All of those really successful small cap stocks are now in the Russell 1000, and the Russell 2000 has lost them. So I actually think right here, what you're going to see is Russell 2000 starting to behave like a traditional domestically facing sort of growth sensitive stock. And tomorrow, on the 14th, a big CPI print. If you got a friendly CPI print, it would not surprise me to see small cap respond very well to that as a result.